Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to discuss about major income tax and financial regulation changes effective from 1st April 2026. Introduction. From 1st April 2026, several major changes will come into effect in India's income tax framework and financial compliance system. These updates will impact salaried individuals, taxpayers, banking customers, and digital payment users. Key areas such as salary structure, in and income versus retirement benefits, full and final settlement rules, introduction of a new tax year, and revised income tax forms are undergoing significant transformation. Along with this, important changes in PAN usage, RBI regulations, digital payment security, and mandatory multi-factor authentications aim to make the financial system more transparent, secure, and aligned with global standards. This presentation highlights all major updates and their practical implications for individuals and organizations. Salary structure is changing. Earlier, base component was usually 25 to 40% of CTC. Now, from 1st April 2026, uniform wage definitions will apply. Wages is equal to basic plus DA plus returning allowance must be at least 50% of CTC. PF, gratuity, etc. will be calculated on this. How will it affect you? Since DA and returning allowance are rare in private jobs, so base salary will increase to 50% of CTC. In-hand salary versus retirement corpus. Earlier, lower basic mean lower PF deductions, leading to higher monthly cash in hand. Now, from 1st April 2026, higher base component means more EPF is deducted every month. How will it affect you? Your monthly take home might drop slightly, but your retirement savings will grow much faster. Full and final settlement. Earlier, it usually took 30 to 90 days to receive your final paycheck after leaving a job. Now, companies must pay your full settlement within 2 working days of your last day. Introduction of tax year. Earlier, two confusing terms. Previous year you earn plus assessment year you file. Now, from 1st April 2026, one unified term, tax year. Tax year is equal to the year you earn income and file taxes. How will it affect you? Tax year 2026 is equal to income earned April 2025 to March 2026. Simpler, cleaner, less confusing for everyone. Other changes. TCS on overseas tour packages. Earlier it below rupees 7 lakh is 5% and above rupees 7 lakh is 20%. Now uniform 2% flat. Sovereign gold bond SGB taxation. Earlier SGB maturity gains were 100% tax free for all investors. Now tax free only for original RBI buyers. Secondary market buyers pay 12.5% LTCG or STCG, whichever applicable. STT hike securities transaction tax. Earlier it was equity features 0.02% and options 0.125%. Now equity features is 0.05% and options is 0.15%. Revised return timeline. Earlier it was 9 months, now it is 12 months. New income tax rules 2026. Education allowance exemption limit. Earlier it was rupees 100 month per child up to 2 kids. Now rupees 3000 per month per child up to 2 kids. Hostel allowance exemption limit. Earlier it was rupees 300 per month per child up to 2 kids. Now it is rupees 9000 per month per child up to 2 kids. Rent scrutiny. No relation disclosure required earlier. Now you must declare your relationship with the landlord if rent is more than rupees 1 lakh per year. HRA exemption. Higher exemptions up to 50% allowed only in 4 cities: Mumbai, Delhi, Chennai, Kolkata. It was for earlier. Now up to 50% exemption now applies to 8 cities: Added cities are Bangalore, Ahmedabad, Pune, and Hyderabad. Gift voucher exemption limit. Earlier it was rupees 5,000 per year. Now it is rupees 15,000 per year. Meal coupons exemption limit. Earlier rupees 50 per meal, rupees 26,400 per year. Now it is rupees 200 per meal, rupees 1,05,600 per year. Interest-free loan from employer. Earlier it was rupees 20,000 exemption. Now it is rupees 2 lakh exemption. New taxation forms. Under the new income tax rules, some forms have been renamed. Old name is Form 16. New form name is Form 130. Salary TDS certificate from employer. Earlier it is Form 26 or AIS. New is Form 168. Summary of all taxes linked to PAN. Old Form 16A. New is Form 131. That's TDS certificate for non-salary income. Form 26Q. New is Form 140. TDS return for non-salary payments. PAN usage. PAN is required for many financial transactions and now the limits have been revised. Cash deposits. Earlier it was more than rupees 50,000 per day. Now from rupees 10 lakh per year. Vehicle purchase. Earlier all excluding two-wheelers. Now value is rupees more than rupees 5 lakh. Hotel or event bills. Earlier rupees 50,000, more than 50,000. Now it is rupees 1 lakh. Property purchase. Earlier it was more than rupees 20 lakh. Now more than rupees 20 lakh. New RBI rules. BSBD account. A zero balance savings account, no minimum balance required, but has certain limits and restrictions, which are digital banking. Earlier open restricted or paid. Now mandatory and free. Internet mobile banking. Debit card. Earlier only ATM card, sometimes paid. Now free ATM come debit card, no issuance or annual fee. Checkbook. Earlier not guaranteed. Now minimum 25 free leaves per year on request. Digital payments. Counted as withdrawals. Now unlimited and free. UPI, NEFT, IMS don't count as withdrawals. Cash withdrawals. 4 free per month total earlier. Now 4 free cash like ATM withdrawals. Digital is extra and unlimited. New RBI rules. Online payments. RBI is making your everyday payments more secure. That's what's changing. Mandatory multi-factor authentications. Every digital payment, UPI, cards, wallets will need at least two layers of distinct verification. Something you know, PIN or password, something you have, your phone or card, something you are, fingerprint or face ID. RBI online payments. Required factors. Current rule is open just a PIN or a single OTP. Now must use at least two factors from different categories, knowledge, possession or inherence. Dynamic security. Static earlier presently static pins often reused for every transaction. Now at least one factor must be dynamic, unique to that specific transaction. Biometric integration. Optional for most apps. Now encouraged as a primary inherence factor, fingerprint, face ID to prevent SIM swap fraud. Other minor updates. Hashtag annual pass. Earlier rupees 3000, now rupees 3075. Crypto asset disclosure. Not disclosed properly. Rupees 200 penalty per day. Wrong details reported and not corrected. Rupees 50,000 penalty. Conclusion. The upcoming changes effective from 1st April 2026 mark a major shift in India's tax administration and financial compliance landscape. From a restructured salary framework and new income tax rules to revised PAN transaction limits and enhanced RBI payment security measures, these reforms are designed to promote transparency, improve taxpayers' convenience, and strengthen digital financial safety. While some adjustments may require initial adaptation, The overall impact aims to create a more organized, secure, and future ready financial ecosystem. Staying informed and compliant will help individuals and organizations navigate these changes smoothly and make better financial decisions moving forward. Disclaimer: this presentation is prepared solely for general awareness and informational purposes. The details shared regarding income tax rules, PAN regulations, RBI guidelines, and other financial updates effective from 1st April 2026 are based on publicly available information and prevailing interpretations at the time of preparation. Viewers are advised not to treat this as legal, tax, or financial advice. Policies and regulations are subject to change, and individual situations may vary. For any specific clarifications or personal guidance, please consult a qualified tax professional, financial advisor, or the concerned regulatory authority. The presenter assumes no responsibility for any decisions taken based on this information. Thank you very much for your patience. Request for like, subscribe, and share.